We constantly look for different opportunities in Asia ex-Japan market. Um, I think what we're dealing with, in the current market situation is the countries within the region, they are in very different economic cycle. In terms of the stage, China just reopened, and South Asian countries they benefit from the commodity price increase last year. So the inflation has been driving share price performance in South Asian country last year. However, we think after that rally, if our assumption is correct that inflation is peaking out this year, we think the South Asian rally is done, driven by the inflation expectation. Valuations became rich in South Asian countries, and we are actually having a very challenging moment to be very much positive or complete overweight in the South Asian markets. We're just being very selective in Indonesia market and some sectors in Singapore market. This year in 2023, because of China reopening and also because of the cycle that they're in, that which is about 1.5 years lagging behind the rest of the countries in the region. China's growth is recovering, and the growth is among the strongest. Well, not among the strongest, but it's the strongest in 2023. That China will be driving the recovery and the growth of the whole Asia ex-Japan region. So countries that have trade surplus to China will benefit from that this year. So I think this is first the reason why we are more underweight South Asian countries versus North Asia, and second, China is being considered on the North Asia part as the major growth driver. And when we're looking at Taiwan as a market and South Korea, they have some technology-related companies that is more advanced, and we're seeing the technology inventory restocking cycle potentially to begin in 2023, and also because companies such as TSMC, Samsung Electronics, they have the leading positions to supply respective semiconductor to the world, and Samsung is slightly more sensitive to the macro environment, which we are a little bit more cautious. But they still, give a very strong earnings visibility, from our bottom-up stock pick process. So we are also quite selectively looking into some of the recovery in South Korean market. We're not entirely positive about South Korea because they're still, looking to control and manage the inflation, and as I said, they are more exposed to external, macro weaknesses. But the interest rate cycle is actually normalizing. We're actually seeing the recovery is underway, and we're able to select companies within the financial sector that that is looking attractive from a valuation point of view. So I think North Asia we're actually just a bit more constructive from all these valuation and growth profile angles.